Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is January 27th, Friday. TGIF. Happy Friday, everyone. And this is a big day today. We got the GDP numbers, so let's go ahead and take a look at the economic news releases. So we'll start off with the GDP. The fourth quarter comes in at 3.2, up from the third quarter's final results of 2.6. Good, but does still fall below the expectation of 3.5. Again, this is just the first version comes out. We usually revise it about 3 times, so we'll see as we go on if this gets revised out. But initially, they're starting it off at 3.2. Uh, one of my friends, Dan Rawich, mentioned that the numbers he's calculated that for us to really make a significant difference in the job market, we're going to need at least a 7% for at least good 2 years to make any significant changes regards to employment. So we're kind of a ways off of that, but 3.2 is much better than contraction going into another recession. So normally this would be a good market at 3.2 growth, but because how far behind we are, we need to get caught up. So we need a little bit more steam than this. So employment cost index came in at the same as the last third quarter at 4.4%. And consumer sentiment, a little bit lower at 74.2. And then we have the technicals. Well, as a result of all those, and then of course they lost some steam yesterday, the stock market's down. Oil prices kind of gone up a little bit more because there's concerns about the protests are turning a little bit more violent in Egypt. So there's a bit more concern. So the price of barrel is going up. So let's take a look at the bond market. And as we saw yesterday, we're down a little bit, and then we actually raised up quite a bit. So we had a nice intraday price change for the better yesterday, brought us close to 10-day. And I think today's rally, even though it started the day off lower, really kind of signifies that we're heading in the right direction. Especially if we close above the 99 mark, this could really help us to. Of course, we still need to hit above 100. That's as we've seen. We've gotten close and just keeps knocked down. But we really need to get above 100 to make a significant impact here very soon. So let's keep an eye on it. And today, right now, we're getting a nice little rally. So mortgage rates are better today, and let's hope that they continue. You guys have a wonderful weekend, and see you on Monday.